All right, today we are digging into a real head-scratcher on the stock market, MercadoLibre. Now, you probably know them. They're the absolute king of e-commerce and fintech in Latin America, a company that, by all accounts, is firing on all cylinders. But its stock has hit a pretty rough patch. So what's going on here? Is Wall Street seeing some hidden danger that we're not? Or is this actually a massive buying opportunity in disguise? Let's unpack it.
So, first things first, here's the chart that's got everyone talking. The stock is down, and not just a little bit. We're talking more than 17% below its recent high. Now look, for a stock that's usually a Wall Street darling, a drop this steep, well, it doesn't just happen by accident. It makes investors start asking some pretty tough questions. And this is where it gets really interesting. This is the core of the puzzle. While the stock price is taking a hit, the business itself, it's absolutely booming, hitting all-time highs. So you've got this complete disconnect. Is the market seeing a risk that's hiding behind the headline numbers, or is it totally missing the big picture? That's what we're going to figure out. To really get what's happening, you have to start with the fundamentals of the business. And let me tell you, they aren't just strong, they are spectacular. Let's just do a quick run-through of their latest quarterly results so you can see just how well the company is actually doing.
Okay, let's start with profits. In their last quarter, the company brought in a staggering $825 million in income from operations. I mean, that is a record. This isn't just about growth anymore. This is a whole new benchmark that shows just how profitable their massive ecosystem has become. And where's all that profit coming from? Well, it's coming from a top line that's just exploding. Net revenues shot up 34% compared to last year, hitting almost $7 billion for the quarter. You know, the engine is clearly redlining, running faster than it ever has before. So what's fueling all this? People. More specifically, the 68 million people who are active on their fintech platform, Mercado Pago, every single month. And that isn't just a static number. That base is growing like crazy, up 30% in just 1 year. And these are all users getting pulled deeper and deeper into their entire financial world. And if you listen to management, this isn't some happy accident. They see this as the direct payoff from a long-term strategy. The CFO basically said years of disciplined investments continue to compound. In their eyes, this is just the beginning, not the peak. So, if everything is so great, why on earth is the stock dropping?
Well, the answer, it seems, lies in their biggest and most important market, Brazil. MercadoLibre is making a huge, aggressive, all-in kind of bet. They're actually sacrificing some of their profits today for what they hope will be total dominance tomorrow. And that is exactly what's making some investors on Wall Street really nervous.
So here's the move that changed the entire game. In Brazil, they completely slashed their free shipping threshold. It used to be on orders over 79 reais. Now, it's on millions of items starting at just 19 reais. This is a direct shot, a declaration of war against deep-pocketed rivals like Amazon and the fast-growing newcomers like Shopee and Temu. They are going after every single customer. But according to their commerce president, this isn't just about fighting off competitors. It's actually part of a much grander vision. He said their goal is to bring the offline world online. Think about that. They're trying to convince the massive number of people who still shop in physical stores to finally make the switch. So they're not just fighting for a bigger piece of the online pie, they're trying to make the whole pie bigger for everyone. So the big question is, did it work? Well, the early data is pretty clear. After they rolled this out in June, the growth rate for items sold in Brazil just took off. It accelerated from an already impressive 26% to an incredible 34% year over year. So yeah, customers are responding exactly how MercadoLibre hoped they would. Okay, so let's flick this around and look at the bull case. For the optimist out there, this super aggressive move in Brazil isn't a risk, it's a masterstroke. It's a classic case of using your massive scale to lock in long-term dominance, you know? It's actually not that different from Amazon's own playbook back in the day. So what's the argument here? It's all about the power of their ecosystem. See, the cheap shipping isn't really about just selling more cheap stuff. It's the gateway drug. It brings in new customers who are looking for a deal, and it gets them buying more often. Once they're in the door, they're way more likely to use Mercado Pago to pay, or maybe even take out a loan. This creates this incredible stickiness that makes it really hard for Amazon or anyone else to steal them away. So the bulls say, yeah, it costs money now, but it's a strategic investment to lock up the market for good.
But of course, there is another side to this story. The bear case argues that this huge bet on Brazil comes with some equally huge risks. These are the kinds of growing pains that could seriously mess with the company's ambitious plans. The bear case really boils down to a few key things. First, and most obvious, is margin pressure. All that free shipping isn't free for them, and their profit margins have already taken a hit. Then there's the competition. I mean, they're in a knockdown, drag-out fight with global giants like Amazon that have almost unlimited cash to burn. The third big risk is their credit business. Their loan book has ballooned to over $9 billion. If those volatile Latin American economies take a downturn, that could mean big losses. And finally, there's just the sheer difficulty of it all. Making money by shipping millions of tiny, low-cost items is incredibly complex. Bears are worried the company's high stock price just can't handle these shrinking margins. And you can see that worry reflected right here in this chart. This shows the company's forward price-to-sales ratio. Basically, it's how much investors are willing to pay for every dollar of future sales. After hitting a crazy peak back in 2021, that multiple has fallen off a cliff. This is the market in real time saying, hey, we're worried about your profits. And that worry is hitting the stock price directly.
So all of this brings us to the final showdown, valuation. The entire debate, whether you're a bull or a bear, really just comes down to one question. Can the company's future growth justify its current stock price, especially with all these new risks in the mix? Now let's look at what the pros are expecting. On average, analysts think both revenue and earnings will more than double by 2028. That's phenomenal growth. But here's the catch. For the stock to hit their price targets, its PE ratio, that's a measure of its price compared to its earnings, would have to shrink from almost 59 down to under 39. So you're basically betting that the company can grow its earnings so incredibly fast that it makes today's high price look cheap, even while the market is getting less and less willing to pay a premium for it. That's a tough bet. And all of this uncertainty creates this huge divide. You've got bearish analysts who think the stock isn't going much higher, and then you've got super bullish analysts who think it could soar to $3,500. I mean, that massive gap between opinions tells you everything you need to know. Even the experts can't agree on whether this big gamble is going to pay off. And so that leaves us with the final big question. MercadoLibre is playing the long game here, no doubt about it. They are sacrificing profits today for what they hope will be an unshakable empire tomorrow. The question for every investor is simple, but it's also incredibly profound. Is this a brilliant, visionary move, or is it a high-stakes gamble that's stretching the company way too thin in the face of some truly brutal competition? The answer to that is going to write the next chapter for Latin America's tech champion.